Most people see this long red line on their screens and think, "Sab khatam." So they panic and sell everything, hoping to save as much money as possible before everything loses its value. But while this crowd was screaming and panic selling, another small group of professional investors were doing something insanely different. They weren't selling or holding their stocks. Instead, they were buying aggressively. How weird is that? Maybe they're all millionaires. Well, not really. While that might also be true, there's also this tool which helps read the market mood. And guess what? These investors were using the same tool, and when the markets recovered, they were able to make huge gains, which is why it's a tool worth understanding. And today, we are going to do exactly that. We'll understand what is India VIX, how it works, how it is calculated, and most importantly, how you can use it to make smarter investment decisions. So let's get started. You must have heard about the poker players' tell. India VIX works in a similar way. In poker, you don't just look at cards. You look at the sweat on your opponent's forehead, their voluntary and involuntary movements, which are called their tells. Similarly, India VIX tracks market volatility instead of the top 50 stocks like the Nifty 50 or Sensex. Then you might ask, how is it calculated? It is calculated using the price of Nifty options. Think of options as insurance for stocks. When professional investors get terrified that a crash is coming, they rush to buy insurance to protect their stocks. So when this demand for insurance skyrockets, the price or the premium also goes up, which in turn causes the India VIX to go up. But here's what most beginners get wrong. They see a high India VIX and think the VIX is at 30, so the Nifty is going to fall 30%. Wrong. Take a random VIX number, let's say it's 19. Divide it by the square root of 252. 252 is the number of trading days in a year, and you will get roughly 1.2%. This 1.2% means the market is supposed to move 1.2% today. But here's the catch. It doesn't tell you the direction, only the size, which means the market can go up by 1.2% or down by 1.2%. Which is why India VIX number is split into different zones to gauge out the emotional tone of the market. Let's look at the 3 times India VIX tells you exactly what the market mood is. So first, we have the comfort zone, VIX between 15 to 20. This is your business as usual. The market is calm, moves are small, 1%ish, and you can sleep calmly at night. This is for regular investing. Next, we have the smoke alarm, VIX between 20 to 30, meaning something is brewing. Remember Budget Day 2024? The VIX shot from 18 to 28 in just 4 hours. The markets were swinging 2 to 3% daily. This is where the pros actively start watching their screens. Lastly, we have the blood in the street zone, VIX between 30 to 50 or 50 plus. This is the fear zone. Remember the Russia-Ukraine conflict? The VIX passed 40, and then during the 2008 financial crisis, VIX kept spiking repeatedly. There's also an extinction level event which only happened once in India during March 2020. At that time, the India VIX had hit a record-breaking 86.64. At this point, most people were convinced that the world was ending. But historically, this is a pattern we have seen before. VIX reaching 80 is not the start of world ending. Instead, it's the final scream of sellers. 75% of the time, the market delivered positive returns the very next day after an extreme VIX spike. Because around 80, fear becomes almost irrational and hysterical. Now, before you go and buy every time the VIX goes up, stop. That's actually a trap. A high VIX isn't an automatic buy button. It's a volatility button. If the VIX is at 40 and you buy, the market could still drop by another 5% before it recovers. And if you can't take that kind of a risk, then the VIX might not work well for you. So always follow the golden rule. VIX rising plus market falling is fear building among investors. So stay cautious. Second, VIX high plus market stops falling, the sellers are exhausted, meaning strength is building. Now most people spend their lives being victims of the market's mood. Imagine the people who were planning to retire during COVID or during the 2008 financial crisis. The India VIX gives you a superpower by letting you step outside the crowd and view the bigger picture. When the VIX is low, stay disciplined. When the VIX screams, get ready to be brave. Control your emotions or the market will control them for you. And I'll see you guys next time. Investments in securities markets are subject to market risk. Read all the related documents carefully before investing.